I started investing when I was 19 and I'm 27 right now. And one of the hardest things throughout that time has been holding on to good investments. Because the market is crazy, unpredictable, and even good assets will have periods of sometimes even just random underperformance. So, for example, this right here is the 5-year stock chart of Realty Income. And for this stock, right now is one of those difficult periods. It has been selling off for the past couple of months, and I see all the time on Reddit people questioning their investment in Realty Income. Just a couple of years ago, Exon was in a very similar situation following the pandemic. This is when tech exploded, EVs were going to take over the world, and for a solid year, oil was really doing terrible. However, oil companies do make a ton of money, and since then the price has recovered very nicely. And I can go on and on with more examples. Even ETFs, right now, SCHD for the past year has really underperformed the market, but in my opinion, SCHD is still a very high quality investment. And in the future, it most likely will recover and reward the shareholders that were able to stick with it during these periods of volatility. I love charts like this that show the psychology of market cycles, and it does a pretty good job illustrating different emotions investors are going to feel during various market cycles. I know it's very tempting to distance yourself from these emotions and say, well, this doesn't affect my investment decisions. But most likely it does, and that's just something you have to come to terms with as an investor and try your best to mitigate it from impacting your final returns. Early on in my career, I learned the lesson of not picking the investment that goes up and to the right the most. It will have these periods where it has underperformance, in a lot of cases worse than other options. This is when you're going to be doubting your investment thesis, and if you bought it because the price is going up, when that changes, even if it's a good investment, you are likely to sell it and negatively impact your final total long-term returns. An extreme example here is Bitcoin. So Bitcoin here is the yellow line and the S&P 500 is the blue line. And the returns are just on a completely different scale. So according to this, why would anybody ever buy stocks? Bitcoin is clearly the better choice. But if I had to guess, I think more people lost money investing in Bitcoin than actually made money, even though the returns have been so stellar overall. So it's really not about what's doing best at this moment in time, because that changes based off of the moment in time. I've had much more success focusing on quality investments that the principle is something I agree with. And an investment that falls into this category for me personally is XYLG. Now, this isn't a perfect ETF. It's not even that popular, only about 60 million in assets under management. And the total returns aren't even market beating or anything special like that. But the reason why I could sleep easy at night is because of the approach and the predictability of this investment. I know that regardless of what happens, this ETF will lag behind and underperform slightly the S&P 500. And every month it's going to pay me a pretty hefty around 5% dividend, which actually increases during market sell-offs due to the way options and market volatility work. So for those that don't know, XYLG is comprised of the S&P 500 index with a partial covered call strategy that is systematic. And that's the important thing. There's no human input. Every month, it automatically writes an at-the-money covered call on half of the S&P 500 index. And because of the systematic nature, even though XYLG is just over 3 years old, using its sister ETF, XYLD, which covers 100% of the S&P 500 with at-the-money covered calls, we could easily predict what the performance of XYLG would have been over the past 5 years, because it is exactly the middle between the S&P 500 and XYLD. So it would have looked something like this. And to be exact, we can see that over the past 5 years, XYLD returned 16.5%, and the market 68.5%. So 16.5 plus 68.5 divided by 2 equals 42.5. So over the past 5 years, XYLG hypothetically returned 42.5%, which is exactly the same just about as VYM over that same time. We can see that's not the best performing ETF on the planet. You could take more risk, you could always buy Bitcoin, but the S&P 500 is a legendary benchmark, and it's one of the few that I have absolute confidence in now and into the future. And I know for a fact that the fate of XYLG is closely tied to the success of that index. It will slightly lag behind and underperform, but that difference is predictable. And for me mentally, the psychology aspect of investing, that helps me out quite a bit. And importantly, that underperformance isn't terrible in the context of high-yielding income assets, as we saw VYM has the same exact long-term performance. So that's why I invest in XYLG, and it's one of the few rare ETFs that I know I can hold through thick and thin. Because your ability to stay invested by far has a bigger impact on the realized final returns. Divo is another one of my favorite ETFs. It's similar, it has a covered call strategy, roughly a 5% dividend yield, and it has better performance than XYLG. However, it is actively managed, and it's very possible in the future they could severely underperform the market, and I could lose faith in it because I don't really know what's happening. But even so, I would never go all in with even a fund like XYLG, because again, it does underperform the broad market, and that's why I invest in other names like QGrow, which are more growthy and volatile than the rest of the market. And I think if I can manage to hold on to it for a while, it might give me pretty solid returns. So that is why I invest in XYLG. I know it's not the top performing fund ever to exist. However, it's predictable. And when it comes to the psychology of investing, I find that to be extremely valuable. The S&P 500 is one of the only indexes I have complete faith in, and this ETF is going to closely follow that while satisfying my income needs. And when compared against other income assets like VYM, the total returns are still pretty comparable. But even so, XYLG is not my only investment, and I have more risky options to hopefully try and gain even more growth. But let me know in the comments below, do you guys have a similar ETF stock investment that you know 100% you can hold through market turbulence and that you have full confidence in? Or do you prefer to just chase the investment that goes up and to the right the most? Let me know in the comments below. Hope you guys enjoyed, and I'll see you guys in the next one.